All right, ladies and gentlemen, welcome back to another episode of the Market MadHouse Show. My name is Cyprian Francis, and with me, as always, co-founder, top trading guru at Madison Trading House, Mike Patton. Good morning, Mike.
Good morning, Sip, and good morning, everybody.
Looks like you survived Minnesota.
I did. Yeah, it was fun. So, for those of you who don't know, we did a road trip. Madison Trading House. We went to visit one of our clients. He was doing a program where we went to do training at his home. Got to meet his whole family. I mean, he had his kids, his grandkids, everybody was there. So it was great. It was easily one of the best experiences we've had on the road. So it was fun. I also got to see. I'd never been to Minnesota before, so I got to see Minneapolis as well as St. Cloud, and just a great time. And by the way, those of you from Minneapolis, man, beautiful city, beautiful city. I was tempted to stay just because it looks so good.
Well, from what I saw in your stories, it
Yeah,
looked like the weather was on point. You might not, you might be
yeah,
changing your opinion here in a few weeks, right? But
right.
that
I heard it gets ridiculously cold too, so I think I'll enjoy
that
the summer. That's it.
That's great to hear. I assume that the members are happy to have you back in the studio.
Yep.
It's starting to ramp back up. The markets are picking up. Today is September 7th. We've got the Bays book coming out this afternoon, I believe, which I think the market's kind of waiting for. Otherwise, the sell-off has been ongoing, and we're just now kind of catching our breaths. But Mike, are we teetering on another pass to the downside here?
Well, yes and no. We basically, I don't know. Let's just look at the overall market here. Let me just jump here really quick. It's SPY. Um, as far as it goes, hmm, let's look at
Well, the
the
big stat I
historical,
heard today was the only the second up day in the last eight.
which is true. I mean, I already said this before. I do believe that the downward pressure is going to last. I mean, I don't see how it can go away. Obviously, the Fed is hard set on killing inflation, and obviously, inflation is still here. We also have a lot of price pressure still, energies prices, etc. So, I mean, we do have a bump in the money, the positive money flow, that's for sure. But overall, I just don't think that, you know, there are always buyers for the SPY, just to be clear. Like for everyone, long term investors always buy. They have to, right? So there's always going to be a buyer for the SPY, the Spider ETF, which is a ETF that tracks the S&P 500. But that doesn't really matter. The point is that overall, values of companies, et cetera, are going down. And I don't think that we're going to get out of this. I think we're just down for the next leg. So, on a technical basis, which actually I was going to go over this a little later as well. Sorry, just waiting for it to load. There we go. So, there's the SPY. And if I look here, sorry, I'm trying to hide this. There we go. All right. So there we go. So if I look at the SPY, these price channels, which we're going to go over later, we can see that we kind of peaked out here. Now we're trading to the other extreme, and the key is to see if we go lower than that. So we're hanging on the thread right there, as you rightfully said. We're just teetering on the edge. And what the market really wants today, for those who are bullish, is they really want to see this recover from where it is now. It is a short week, and we do have a lot of economic data coming out later. So I would just say right now, don't hold your breath if you're bullish. I would say be cautious. I do think that we have another downward leg to go, but I wouldn't be surprised if we have a little bump here for a little bit, and then maybe it turns lower later. But it has been quite a while since we see a really positive day. I mean, we've been going down a lot, so we'll see.
Yeah, and you never really know what to expect with the Beige book or when some of these Federal Reserve chairmen are speaking.
Hmm.
That can usually tend to move the market. And then just looking ahead to next week, I feel like the CPI data is really going to be the driver because everything is being tailored around inflation,
Hmm.
which brings me to my next point, which is oil. We touch on oil a lot, and
Hmm.
we've got oil numbers coming in tomorrow, which could affect our outlook on inflation in the overall market. What are you seeing in oil?
Well, the current expectation is they're expecting another drawdown of about 1.1 or 1.4 million barrels, somewhere around that neighborhood. The reason why they're not announced today is because of the holidays, so they got pushed forward to Thursday. Um, but one of the bigger things that happened with relationship to oil is that OPEC has said that they're going to do a small cut in production. I think about 100,000 barrels per day, which is not a lot, but in the context of why they're doing it, that is significant. They basically said they want to bolster oil prices. Now, as of this moment, I actually did the average of the oil price, crude oil futures, that is, over the last over this year to date, and we're averaging about $99 and 60 something cents. So we're just below the 100 mark. So I did say that I am certain that oil is going to average at or above $100 a barrel for the year. So far, I'm slightly off. It's a little bit lower, but I think as we go through the end of the year, that price point is going to go right back up. So I think our overall average will be $100 a barrel or more for this year, and if not, very very close to that. And it's obvious that OPEC wants the price to stay in that neighborhood. So if that's the case, they're going to do everything in their power to keep prices up. So one of the members mentioned to me that Iran, will be putting more oil in the markets. I don't know how much, but I do know this, that if OPEC's committed to keeping oil prices higher, if Iran picks up their output, their oil into the market, well, OPEC's just going to cut more to keep the balance. So in short, I do think that we're going to continue to see oil inventories draw down. I do think that energy prices will continue to go higher, which is a pretty bad thing because as of right now, in Europe and in the United States, as well as other places in the world, energy prices are a serious problem. Uh, the estimates now have that 40, I think 40% or some number like that of households in the UK are in serious trouble with their energy bills, or at least behind. I think a quarter of them can't even pay it. We had some places saying that people are not even going to turn their heat on during the winter, which is nuts. You have governments telling people to go get firewood, and I mean, it's just unbelievable. And then here in the United States, we tend to think that we're going to be immune from that because hey, we got our own energy supplies and blah blah blah. But we've been shipping out our strategic petroleum for a while now, and inventories are kind of low. So it's like, I don't know if that's a good idea. It's not. So now we also have the possibility of further draw cuts in energy output from Russia, which of course is probably the world's biggest energy producer, if I'm correct, overall. So in short, yeah, energy is going to be an issue, and I've warned all my friends who live in Chicago. I said, look, last winter wasn't that bad; it was fairly mild, but if this winter is colder, if you got a place that is not very efficient, et cetera, you better do something about it now, because once those prices start to rise, there's nothing you can do about it. And at this point, one statistic said that people are paying like 8% more, or 8% of their income. A good number of people are paying 8% of their income to energy bills. I mean, this is crazy. So inflation is here to stay, guys, and it's not going to be just this year. This is going to last for, my opinion. This is going to be something that's going to stretch out for years. So best get ready.
Yeah, I feel fortunate because I think of winter and I'm like, oh, what's that? I don't remember. I don't remember.
Yeah,
It gets to like 45 around here, and people start complaining. I'm like, 45 degrees, really?
you guys have
Um,
climate control in that state now.
yeah,
I
but
don't, I don't
we
get it.
are in the middle of a heat wave right now, so you win some, you lose some.
Right.
In addition, I keep seeing news of these lockdowns happening in China. I saw a video, right? And I don't
Hmm.
know what to believe of it, but like it was all these people running out of an exit because
Oh yeah,
someone in the building
yeah,
had contracted COVID, and
and they
like
just
they were gonna
ran.
lock everybody down. And I'm like,
Yeah,
wow, that's crazy.
I saw that video. I mean, it does look like it's fiction, but it's probably true. I mean, like they were breaking down the door to get out of that place. Um, but I get it because I mean, China does have a zero COVID policy, and I guess if you get infected, even if it's not deadly to you, you're probably gonna get locked in your house for a long time. So I think it does make sense for people to run for cover, but also the zero COVID policy. I mean, since we're in the Western world, I have to add that obviously it's in our interest of our media to kind of exaggerate everything or make things look worse than what they are. But at the same time, I do think this is a bad situation for China because if you look at their economy, since they really, really depend on manufacturing a lot, they're the world's manufacturer, and when you work from home, if you have COVID or stuff like that, it's not so big of an interruption. But if you have to actually go physically to a facility, it's a different story. And manufacturing at this point in our society's evolution, we can't just sit in our houses, push a button, and the 3D printer produces all this stuff. I mean, we don't have that technology to make real major manufacturing at home. So as a result, people have to go to work. And I think that with China's lockdowns, I mean, I think they have it's a large number of cities. I think it was like I'm trying to remember the number. There's just 65 million people currently locked down. 33 cities total.
That's
So
a
I'm
big
assuming
number.
some
That's
bigger.
a big number.
Yeah. Now, China, of course, has a lot of cities, and 65 million people in China is that's a drop in the bucket. It's not that big of a deal. But the point is, every time it spreads, and this is kind of what I expected they would do, they just lock one city down and its neighbors, and they stop travel, and then moves on from there, and then they do it again, and it's like they're shuffling the deck a lot. Like it's like, okay, it's over here now, so we're gonna shut that place down, and then we'll try to move everything over to another location, and you can't. I mean, on the scale of the number of people in China and locations and the density there, I just don't see how they can pull this off. So that's why everyone's looking forward to that meeting we talked about last time, that's coming up in October, where some people are expecting they might change that policy. But my experience with China, at least observing them, is that the moment it looks like that the virus is getting out of control or spreading too quickly, they're just going to shut everything down again. I think that the leadership there basically, there's two reasons. One, politically, if they can keep their COVID numbers really low compared to the rest of the world as far as the number of infections and deaths, or at least make it seem that way, that is a huge political victory in their minds because it makes them look like they know better what they're doing than everyone else in the world. And they've been pretty clear about that fact that that's the way they see it. The other thing is that economically, I think they would do the math in their heads and saying it'd be better to lock down 33 cities than to have half the country, infected with, like COVID spreading all over the country. And then we have people dying here and there. And then we have to finally lock down everywhere. So, in some sense, they're right. But at the same time, it's a very difficult thing to manage. But there it is. I mean, I guess they've already committed to it. So there's no way out.
Yeah, I can't imagine the US having lockdowns again. I just, man, it's just like a nightmare to me. But
Yep.
we'll keep an eye on it. And if any of our listeners, watchers, have business in China, you'd seriously want to consider some of these lockdowns and finding alternative ways to fulfill those needs. All right, so moving on, let's go ahead and let's just give everyone a quick opportunity. So in the next couple of minutes, what we're going to do is Mike's going to run through some trading examples using Madison Trading House. The program is sponsored by Madison Trading House. Mike is one of the co-founders of Madison Trading House, and Madison Trading House, Madison Trading Software, is an incredible AI-powered trading tool that basically takes all this information and makes it easy to digest and to make decisions, investment decisions. And so We want to go ahead and give everyone an opportunity to download it, to sign up for themselves, to give it a trial run. I'm going to go ahead and add the link into the chat. It's just madisonTradingSoftware.com. And let's just get straight into the first name. And this was kind of a shocking story that came over the wire this weekend that makes you kind of think, wow, what's really going on here? And that's the current CFO of Bed Bath and Beyond jumping, I think, like 16 stories out of a New York high rise.
Yeah, it was bizarre. It was, I mean, so some reports make it seem like it might have been an accident, but I doubt it. So yeah, I have to assume that he deliberately committed suicide, or committed suicide. So, I mean, we have a lot of news out this week, with FOMC members and everything speaking, but this story really, I think, captured a lot of people's attention because it just was so bizarre. And then when you look into it further, it makes a lot of sense what happened there. So we covered Bed Bath and Beyond. Was it a couple weeks ago?
Like two
I think
weeks
it
ago,
was.
yeah.
Yeah. So I went over the fact that the stock had spiked a lot, and I looked at the software and I pointed out, just like it's on my screen right now, that the metrics don't look good at all for Bed Bath and Beyond. They didn't then, they don't look now. But at the time, the technicals actually did look good because the stock was going up sharply. So that was way over here. And so on this Wednesday, that was actually, yeah, of course, it was on Wednesday, the 17th. We did a segment, for those of you didn't see it, where we discussed this stock. And I specifically said that while I definitely think that the stock could go a little higher, I could also just as easily see it going vastly lower because there's no fundamentals really underlying that price point. Bed Bath and Beyond, as I said then, I'll repeat, is a failing business. It's really failing. They laid off, I think, what, 20% of their employees. They're closing stores. I mean, basically everything about the company screamed it was in trouble. Now, what's interesting is that with the software, I didn't have to read all the reports about the company. The software is already doing that. So whatever publicly available information was available for Bed Bath and Beyond, the software was automatically looking at that and it gave us a summary. And that summary basically is pretty much red. We have one yellow stat for insider activity and institutional activity, but really that just means that nothing is changing. It's just kind of stagnant. Whereas the other statistics were showing that numbers and things were degrading. Sorry, I meant to say valuation, not insider activity. Sorry, that was the dollar sign valuation. So basically, nothing is really improving for Bed Bath and Beyond. And with this current revelation, and I'll just kind of go over the article. The CFO died, and now there is actually a probe going on, an actual federal probe into insider trading and fraud. So he was one of the CFO, Gustavo Arnal, and then you have on the right Ryan Cohen. And Ryan Cohen's a name that some of you might recognize because he was one of the activist investors that jumped into to GameStop back in 2021. I think he actually was in it before then, but at least in 2021. So Ryan basically is the founder of Chewy, which was founded in 2011. Chewy is actually a stock, CHWY, that still trades to this day. It's actually a fairly stable stock, and the company itself seems to be pretty good. But Ryan was investing into other things, and one of them was GameStop. Now, at the time, I felt that maybe that was, admittedly, at the time, I actually was encouraged to buy into GameStop in late 2020 because I saw activist investors like him jumping in while the price was really, really low. Okay, well, then come 2021, when things went crazy, I just said, yeah, I'm not touching that again because I can tell that the price is just astronomically too high. Now, since then, Ryan's still been involved in the company, etc. But what's really stands out here, folks, is that these guys apparently were publishing information about the company that was actually false. Now, keep this in mind. The information they published already looked not good. And the software pointed that out. Now it looks like it actually is it might be far worse. We don't know for sure, but it might be far worse than what they even said then. So they already said it was bad. What we're finding out now is that it was even worse than they were saying. And I think that's why you suddenly see the stock dropping dramatically. It's up 11.43% today, but that's at $7.84. It was nearly at $30 a share on August the 17th. But more importantly, with these developments, it actually points out a fundamental flaw in the way a lot of people are approaching the markets. When Bed Bath and Beyond was going up, the reason why I wanted to cover that was because a lot of people who are members asked about this. Hey, is it too late? Should I get into Bed Bath and Beyond? And my simple answer is, well, look at the numbers. Like, why do you think this is really going up? If someone's telling you that the reason the stock is going up is because it has great value, well, let's look at that. Look at the fundamentals. I mean, the best price target in existence right now is $9. And at the time when we were looking at it in August, the stock was trading above that. The median target for this is $3.80. So analysts have looked into this. Now, I could be Mr. I'm armchair quarterback sitting at home and I could say I'm smarter than all these people. I just know this is a good opportunity because I went on YouTube and all these guys were saying it was good, right? But it takes more work than that to really do analysis. And that's something that takes a lot of time. Fortunately, the platform, the Madison software, has the ability to do that analysis, the same type of analysis an analyst would do. It's going to look at the numbers and figure out what they look like, where are they going, what are the estimates, and then make a valuation judgment of how much the company probably is worth. So based on those figures, that's why we have all this red here, because the software is basically saying, look, you can buy this if you want, but it's probably not a good idea. And this, in this case, I'm so glad we put that out then, because that very day we found out in the SEC filings that on the 2 days leading up, it was Wednesday and also the day before, Tuesday, it was 17th and the 16th, these guys were selling their shares. So they were actually selling all of their shares, not some of them. They sold all of their holdings on those 2 days when it was up the most. And now the investigation is alleging that they were actually deliberately jacking up the price by doing manipulative tactics and lying to people, etc., in order to basically get other people to buy the bag of goods they're selling, and then they run away with the money, and you're left holding the bag. So the government's coming after them, but at the same time, this could have been avoided with the right information. So the next time anyone tells you, to the audience, about a meme stock, just remember that if you look it up on this software and you don't see any good numbers, then the numbers that are being reported aren't good enough that would justify the stock going up that much. And if you're going to trade something like that, just understand it's just a game of musical chairs. You're just waiting to see when the music stops, and hopefully you can get out with a profit before the stock collapses.
Yeah, it's a great outlook at the meme stocks, right? Like, because it's as a trader, it's hard to um, navigate through all the fluff, right? When you're seeing a lot of like positive things, it's hard to go against the grain. But when you pull up the Madison trading software, these are the facts. No matter what is going on in the social world, these are the facts, and this is the power of the software. The one thing that I keep thinking about is, as the CFO of the company, it's his job to provide the public with the accurate information of the financials of the. So if this guy jumped out of a 16-story window to call
Right.
it quits, he wasn't providing accurate data, because like
Right.
so
No
that's
question.
interesting. It's like an age-old phenomenon of publicly traded companies, right? Like, this type of tactic has been going on since like the 1920s. We
Yep.
just now have these new verticals of Reddit and social media
Right.
to help promote stories without the actual facts being there. But that's one of the reasons that I enjoy the software so much, is you kind of can get a good breadth of what is really taking place and make a decision, especially that analyst call, right? Like,
Yeah.
if anyone that was buying at $30 a share knew that the highest analyst estimate was, what did you say,
$9.
$9, right?
Yeah,
That alone, but it also could create a short opportunity if you're an active trader in that sense.
true.
So we'll keep an eye on Bed Bath and Beyond. I mean,
Hmm.
it's an interesting story. I definitely think it's not going away anytime soon. But
Yeah,
as investors, it sounds like we definitely want to stay away,
yeah,
unless we're shorting it to zero, which I don't know if it'll ever go to zero. But hey, we'll see.
we'll see.
Moving on to our next name. This is a new one that I haven't heard of. A company by the name of Enphase, ticker symbol ENPH. Are you
Yes.
familiar with this one? Did this one come up in one of your recent scans?
Yes, it's come up many times. So I'm not. I wouldn't say I'm extremely familiar with the company, but I know what they do. Their renewable energy is their business. So one of the nice features of the software that I should point out now is even if I don't know anything about a company, all I got to do is hover right over the name here, and it tells me exactly what it does. So they're a global energy technology company. The company delivers smart, easy to use solutions that manage solar generation, storage, and communication on one platform. Now, how big of a deal that is, obviously, it must be because the company has a $37.8 billion market cap. So, and this actually looks genuine. Like, this is one of the companies where I actually can see that it's doing good things. It's actually making progress. So how do we know that? Well, the first place I like to look before I get into anything are the fundamentals. And if I look at the fundamentals here, the sales growth is obvious. And this is going back to 2017. You can clearly see the growth is very consistently up. One of the things that I've mentioned in previous podcasts, and I'll mention again, is that one of the characteristics of a growth company, a growth stock, is a very consistent and accelerating growth of revenue. There's nothing that makes investors salivate and just like jump out of their seats more than seeing something that keeps getting more money coming towards it. Like it's a magnet and more money just keeps coming in. Now, even if the company's not turning a profit, that still is not bad because as long as you keep bringing in more money, investors assume that the company will figure out a way to make the company profitable. They'll be able to figure out a way to take all that money and convert it into actual profits. Now, Enphase actually does make a net profit. This is their history. So if we went back to 2017, they were in a net loss, but starting around 2019, they turned the corner. So their trailing 12 months of revenue, or sorry, income was actually positive, and their growth in net income hasn't been quite as good. It's been pretty flat. As you can see, it did have a growth phase and it's been flat ever since. But the point is, they're still making a net profit. And that in and of itself is a great sign. So if their revenue keeps going up and their profit, net income is still staying flat, probably what that means is they're really reinvesting a lot into their business, which makes sense. So they're still taking a profit, but they're trying to reinvest a lot of that revenue back into the business, which is a smart move. Their operational cash flow is ballooning. This is great. Like they're seeing really solid growth in cash flow, free cash flow, cash margin. I mean, most of these stats look really good. And as far as their earnings history, they've consistently been beating earnings over the last 8 earnings in a row. They've done better than expected, which is good. Now, we look at their earnings, we can see their losing periods starting back in 2014, but eventually, starting in 2019, as I mentioned, they start to earn a consistent profit, and profits are expected to grow in 2022, this year, and in 2023. That's a good sign. Also, the estimates seem to be adjusting higher because these bars here, these vertical bars, when the successive ones get higher, that actually means that estimates are improving. They're getting better as time goes by. So that means that as time has been going by, earnings estimates are increasing as people review the progress of the company and say, oh, I think they're going to make even more than expected. Now, right now, when we look at the analyst targets, however, analysts are targeting below the current price. 276.80 is the average. The highest is 363. That does mean that at this point, it is questionable how much upside the company still has. It doesn't mean this is a bad company, and it doesn't mean it won't grow later. But over the next year, which is roughly what these targets are looking at, the estimates are that the company's probably not going to be able to go much higher than where it is now. So fundamentally, it's sound, but we do have to consider the possibility that maybe there's not a lot of upside still left. So if I look at the charts, which we're doing right now, we can really see that this stock is really accelerating right now to the upside. It had a great earnings release. They beat earnings, as I mentioned, that were released on July 26th. So that was a good result. Since then, the stock has been up. It went neutral, now starting to break out again. And where it's breaking out right now is fairly aggressive. This is a very aggressive place to buy. And basically, based on my analysis, this looks like something where we probably will get more upside later, but I would be more cautious about buying. So if I were you, and this is my firm recommendation on this stock, I would wait for it to come back down to roughly this middle estimate, which is 276.80. So if the stock gets down to 280, I would feel very comfortable getting in, because when I look at it on the chart, 280 is right there. It's at the middle of the range. That's a good place. You could always average down between 280, let's say, and 240 would be the lowest point I would say to buy. And from there, there's a very good chance we could return back up to where we just were. So we know they're buyers up here, otherwise they wouldn't be buying now. So as long as we get our little pullback, we can always get in later, and still take advantage of it. So my assumption is that this is not going to be a runaway freight train situation. It doesn't look like, based on the numbers, that the stock really needs to go too much farther right now. So it's already exceeded expectations on price, apparently. So therefore, it makes more sense to expect a pullback. We may not get it, but most likely we will. So, for those who brought this to my attention, I do say that this is something I've been watching for a while. We have put out alerts for in phase in the past. Now we have another potential opportunity after this breakout. We just have to wait for it to come back down to a reasonable price to get in, once some other people have kind of tread the ground and paved the way for the next move up.
Looking at that chart that you just had back in May at that like 140 level, I mean that looks like a steal, right? Like 140, like we've always almost up like 100% from that moment. And
Right.
um yeah, so great find from whoever's been watching it. Appreciate the members bringing these to our attention.
Hmm.
Our next name is one that I feel like a lot of equity traders turn to when they want to play gold, right?
Hmm.
Barrick Gold Corp, ticker symbol GOLD, for the most part follows in parity with the price of gold, every now and then diverging. But is that an accurate assumption?
It usually does, but remember, companies always have other factors that influence them. So no gold company will ever be exactly in step, but you're right. Generally, they are in sync. So if gold prices really go up, a gold producer, a mining company, whatever, as long as they are still in business and they still have something to bring out of the ground, should be fine. It's just like oil companies. Oil prices, if they go up, Exxon usually grows the profits, and if oil prices go down, their profits shrink. But a company that's a new startup looking for oil or barely having an operating well, there's more impact from their production ability than there is from the oil price itself. So Barrick is a well-established company. So therefore they're not in that situation at all. They're going to mostly follow the gold price. So they're one of the world's largest gold producers, as you see here in the description. 21,300 employees. So this is not a small company. $26.4 billion market cap. So this is a big name. Now, a lot of the guys in the who are members, a lot of people who are members with us, are investors, or people that are looking towards retirement. They may already be retired and they're just looking for the best way to manage their money. And gold is a very popular theme amongst a lot of people. A lot of people are worried about the runaway inflation. They're worried about the weakening of our currency and the ballooning debt deficits. And they're right. These are things that they should be concerned about. So they basically say, well, if a company is producing gold and gold prices stay high, then that's a good thing. And that probably is. So Barrick also pays a dividend, which is always a good thing. So you get a little cash flow too. So for those of you who are interested in this, I would just say right now, I do think we're at a decent point to consider looking for a buy. Now, I don't think right this moment is the right time to buy, and I'll tell you why. If I'm looking at the chart, right now the stock is basically bottom out around $15, but it doesn't clearly show that it's about to uptrend for an extended period of time. We have to wait for some more follow through, and specifically, I want to see the stock trading a little higher above these price channels. We're going to go over what these price channels are at the end of the show. But basically, I want to see things move from bottom side to the top side, which would put us around high 16, just below $17 a share. Once we start to make some headway, one of the great things about stocks is they don't tend to just go in a straight line. They tend to go up and they come back a bit, then they go up some more, then they come back a bit, then they go up some more. So we're trying to catch the waves when they're coming down and starting to go back up. That's where we want to get in. We want to let other people literally push the price forwards for us, get the momentum going. And then when it slows down a bit, that's where we take our entry right when some people are starting to sell. So that's the primary strategy that I like to use, and it does work really well. So as of right now, we still have mostly bearish behavior, but I did notice that stock is up 4% today. And judging by how aggressively it went up, I do think that that might be a sign that some earlier buyers are coming in. Now, as of this moment, when I analyze the metrics, money flow is still net negative, but I do see a lot of growth in buying recently. So I do think the money flow is going to show up green pretty soon, within the next few days, because we do see a lot of buying on the 31st of August, 1st of September, and the 2nd of September. I just think this week is throwing things off a bit. We do see a decrease in institutional ownership. It's down 1.25%, but we have 56 more institutional buyers and 48 fewer sellers. It's in 13 fewer top 10s, but I wouldn't think about gold in terms of top 10 because gold's not going to move like a Facebook or sorry, like a energy stock like Enphase or something like that. It's going to basically take its time until there's a crisis, an immediate crisis. So this is normal stuff. I wouldn't pay too much attention to the top 10 part. I would pay more attention to the shift in more buyers and fewer sellers. That's a good sign, especially when you're in the lows. That shows you that people now see a value point for that stock. Now, if we look at it from the software, looking at valuation, presently the PE ratio and trailing and forward both are in the green. That's a good sign. That means that right now the relative price of this is fairly cheap and expensive compared to what it would have been at other times. Price to cash flow is actually looking very good. Green as well. Price to sales is green. Price to book is green. Alpha beta not doing so well. This is actually weighing heavily on the valuation score. Basically, beta means how well the stock is moving compared to the rest of the market. Basically, this is saying that it's not really correlating well at all with the rest of the market. It's kind of doing its own thing. A flat number like point 0 basically means that it's just doing whatever it does. There's no high correlation between what the S&P is doing and what Barrick is doing. Alpha is also very small, slightly negative, meaning that the return so far has lagged a little bit, teeny bit behind the rest of the market. So this stock basically is not doing a lot right now, which makes sense. We looked at it, it's on a flat trajectory right now. So that's usually where buyers who are really interested might come in. So my opinion is very firm on this. I do think that there's a good opportunity here. If we look at the numbers, these are looking fairly good. The current price, we're at 1540. The lowest projected target is 17. The median is 25.35 and the highest is 31.87. So we're literally right now trading right at the price point that the market has or the analysts already think is fair. Now, remember, I said that we want to see the stock price go up first to see that some forward momentum before we decide to get in. And that would take us up to about 17, which is, again, the lowest target. So this is not bad. This actually looks like it's in the right place at the right time. So we need to look into it. Now, as far as the other numbers go, earnings are fine. They're not really growing. Sales growth is not that impressive either, but they're still making a net profit. So, in short, I just think the price of the stock is depressed. Not that it's a growth stock, it's not. I just think the price right now is lower than it should be, and we probably are going to see a rebound soon. So, for all of those of you looking for a bargain entry into a gold company, keep an eye on this one. This one looks like it's a pretty hot item, and most likely will give you some potential upside that's significantly higher than where it is now.
Yeah, I'm a big fan of all the analysis you just did. It makes a lot of sense. Can I assume
Hmm.
that if the interest rates continue to increase, does
Hmm.
that naturally drive gold prices higher?
Actually, it should drive them lower. Technically, higher interest rates are quelling inflation, which should push gold prices down because it strengthens the value of the dollar. So remember, the stronger the value of a dollar is, the fewer dollars it takes to buy gold. So naturally, gold price, not value, but gold price would likely go down if the dollar value goes up, which right now the dollar is actually strengthening. Partially because, in my opinion, it's not just about interest rates; it's also about the fact that um, certain currencies in Europe and Asia are just losing value quickly because of so many problems they're having in their local, in their country. So the dollar has been benefiting a lot from the fact that we're in a much better position with all the geopolitical and economic tensions that are happening around the world. But that doesn't mean that people think our currency is worth a lot. It just means that it's worth better than what others are worth. So, in short, no, interest rates will tend to dampen the value of gold, but that doesn't necessarily mean that this company is going to suffer because, again, what it looks like is just happening is that the value of the company has just been depressed, and it looks like we're at the value point where probably no one is going to want to pass up an opportunity to buy there, which I think is what happened today. We finally see the buyers show up. But once we get to, if we get back to the average expected price, that's probably about as far as it's going to go. But that would take us about $8 a share higher than where we are now, which is a pretty good gain for a stock that's $15. That's
Yeah,
about a
I
50%
think
gain.
the price point is great here. All right, so let's go ahead and run through that nifty chart tool that you had
Hmm.
mentioned.
Yep.
It's I believe you call it the MTH Weekly Study.
Yeah,
Um,
it's
it's like a
abbreviated
it's like
MTH
a
weekly
channel of
chart.
some sort.
Yeah, it's just a price channel, but it's okay. So basically, this is a price channel that we use to help us gauge the overall range that the market's trading in. So it's the yellow channels here. Okay, that's them. So the what the channel does is it's tracking opens and closes of weeks. So it looks at the opening of a week on Monday and the closing of a week on Friday, and basically tracks how high those opens and closes are. So it's not looking at highs and lows in pure, in price period. Like maybe the market reaches a high in the middle of a day and comes back down. It's just interested in the opening of the week and the closing of a week, and we use that to create this range looking back several weeks. And basically, when a stock is really getting neutral, we tend to trade in a very tight range, and then eventually we tend to break out. So, what I was saying about gold is that I need to see this hop over to the other side of this channel. I need to see that people are willing to buy at the higher end of the recent range and then keep buying past it. So, this is a good tool to spot a transition in a trend. Most people will use like moving averages and things like that. But with this, once I see the market is pushing to the top side, then usually that means that there's probably going to be some follow through after that. Or if it's pushing to the downside, oftentimes there's going to be follow through after that. This is the reason why I mentioned with the SPY, one of the major concerns if you're a bull on the SPY, let me get rid of these for a second. If you're bullish on the SPY, right now you should be a little concerned because it's hanging literally on the ropes. It's right there at the edge. And if it doesn't make a substantial climb quickly, then most likely we're going to see some more pressure and go down a little more, right? That's what we have to think about. So with this particular stock or ETF in this case, we're hanging on a thread. And if I'm a buyer, I could buy down here and maybe things bounce back up like they did over here or over there, and maybe I make some money really quick. But in short, I don't usually try to do that. I just look for a indication that there's a bias going in one direction, and then once that bias is there, then we look to take action. So with in phase, we see that it's breaking out the top of the channel, right, which is showing that there's some serious buyers up there. But what we have to think about is whether or not they're going to be strong enough to keep that going. So now that it's broken out, I'm not just going to jump in and buy. I'm going to wait for them to push, advance the stock some, and then wait for the first time it starts to slump and slow down. Once we get that pullback, that's where I want to get in. So I'm letting again other people kind of pave the way first to push through, first, and then after they've advanced and basically pushed the stock into a higher price range, we're looking for it to trade like it normally does, which is, back and forth. It moves up a little bit, comes back some, moves up a little more, comes back some. So if that happens, we should get a good chance, a good opportunity to get in. So if you look over here, for example, this is not the best example, but we broke out the top, we came back down, and then over here we make a pretty good dip. Then from there we go up some more. Then we fail to go any farther for a while. Then we suddenly pick up again, right? So this is not something that's going to predict the future. I'll be clear about that. The MTH vol is actually to project into the future where the stock is likely to be. This is just a mapping of the range the stock has been in recently, so we can detect when the range is being advanced higher or lower. So very useful tool. And if you use this in coordination with our other tools, it's very effective. So right now, like I said, with the SPY, I just know that we're at a critical moment here because we're hovering right on the edge of the recent range. And if we can't find buyers there, then most likely the stock is going to head lower. Um, Whereas with in phase, if we can't find more buyers at the top after it's done this breaking out move, then most likely the stock is going to have to come back sharply. So that's what we're watching right now, is to see if there's more follow through. But if we get some nice follow through like we did over here, we could get a multi-month run, that could take us to much higher prices.
So, two questions.
hmm
One, is this technical feature available for all stocks and all ETFs?
Yes, anything that can be plotted on this chart, um, any ETF, any stock, yes. There's no. This is strictly based on the pricing information on the stock itself. So therefore, anything that is on the chart will have these channels.
All right. Second question. How do you add and remove that indicator on your charts?
Okay, so there's a couple ways to do it. I can hide it by clicking the eye icon there, just to hide it. I can change the settings by going here, right? And then as far as the getting rid of it, if I click this X, it's going to disappear. Now it's gone. And if I want to bring it back, I actually have a saved template that people can use, but I'm just going to click right here to go back to the study. And I'm going to make it yellow, add it, and there it is.
Awesome.
Yep.
All right. So another very useful feature in the Madison Trading software, as we mentioned earlier in the show, if you want to test drive the software for yourself, head on over to MadisonTradingSoftware.com, grab yourself a demo, start poking around. If you have any questions, you can ask the team. You can reach out to Mike. I know they do, sessions. And in addition to that, he's hosting a boot camp, which I believe there are still a few seats left for. So if
Yep.
you're interested in getting a more hands-on lesson with a group of individuals to go over all sorts of things, the link is MadisonTradingSoftware.com/bootcamp. And in that, it's a 5-week course where Mike and the team is going to break down. Actually, let's just talk about it real quick. The basics, price movement, supply and demand, risk management, and options, all tailored around using this amazing software, Madison Trading software, to help make decisions, really, in my mind, like the big funds do. Like major money managers are looking at these types of things, and now they're available to everyday retail traders, which is exciting.
Yep.
Mike, do you anything you want to add on that?
Yeah, I mean, folks, just sign up. I mean, take part of it. It's a great experience. It's as close as you're going to get to our live in-house training. But this will go over all of the juicy details of how to use the software, which is really where your edge comes from, knowing how to use the tools correctly. So go ahead and sign up for that. I'm looking forward to seeing everyone there. We do have a few spots left, so go ahead and get started on that, guys. And I'll see you there.
Yeah, so we're gonna I'm adding the link into the chat now, so you can head on over there. Once again, it's just madisonTradingSoftware.com/bootcamp. Hopefully we see everybody there. This is our 24th episode, Mike, and I feel like every episode I'm just becoming more and more confident in the technology and the software, and it's really starting to make a lot of sense. And so I do appreciate you showing it to me, but I also hope that everybody watching takes the opportunity to demo the software for yourself, because in my mind it does have the power of something like a Bloomberg terminal at a significant fraction of the cost. And so we know what tools like that can do for your bottom line, and anyone that's serious about trading should seriously consider taking a look at the software. So we're going to keep an eye on the Bays book coming out. Is it coming out in an hour at the top of the hour, something like that, I think.
I don't. Hold on. I didn't see the date. Yeah, but something like that. Yep.
2 p.m. Eastern. So yeah, at the top of the hour.
Yep. And one of the FOMC members will be speaking as well at the same time.
Yeah, we'll keep an eye on that. I have seen the Bays book move the market significantly, and I think the market's waiting for something to give it a spark through the end of the day. We'll keep an eye on some of the inflation numbers next week. And if anyone has any questions, specific names that you want us to cover, feel free to leave it in the chat. Feel free to send us a DM. If you're enjoying the content, hit that like, hit that follow, hit that subscribe button. Mike, any final words?
No, just hopefully everyone had a great holiday weekend, and looking forward to seeing everyone in the boot camp. And other than that, everything's good.
Cool. Wonderful. Appreciate your time. Appreciate everybody tuning in. We'll be back next week. Thank you, guys.
Thanks.